Hello everyone, I'm Taha, Financial Market Analyst with zForex. This is our weekly market analysis. Welcome abroad.
Hello everyone. Hello again. This is Muhammad Taha Buhari, and this is our weekly video analysis taken from the 10th July until the 14th July. This week we have a full economic calendar where we have a lot of economic data. We have many central banks meetings, Canadian, New Zealand. We have the most anticipated data coming from the USA, CPI, especially core inflation and inflation, where it will be so much important determining the future perspective for the Fed next move. And through this, we will start with DXY, especially the dollar index, where we saw the last week a clear correction coming back after an FP that was a little bit lower than anticipated, but didn't change a lot as the wages still high, and this is making more pressure. This will not be the best scenario for the Federal Reserve, especially Jerome Powell, but this was a reading negative for the dollar as the market is pricing right now, as the labor market, everyone is waiting for the labor market to slow down. So this data, it was taken as a negative for dollar. So technically on a daily basis, the dollar went back to the level around 2.2, which support level. It's an area more than a specific level, an area where we saw it many times, starting from April, May as a resistance, in June as a support, in June also as a support, and today and in Friday played as a support. So we are waiting what will be the reaction from dollar. So at the support level, we are waiting a breakout or a reversal to the upper side, with the actual data that we will have in Wednesday, where we'll have the inflation levels, where it will make the most impact on the dollar, and also the other risky assets as euro and other type of assets, of currencies. For this week, for the dollar, we have, like we said, the inflation level. We have also many members of the Federal Reserve. There will be some comments, some speech. So we will wait for those comments to see what will happen. We know that right now all the members are still hawkish. When we say still hawkish, it's mean that they want to increase more rates right now. There is more than 90% of probability. The market is pricing for more than 90%. There will be an increase of 0.25% in July meeting. We don't know if there will be a second increase later, but this is how the market is pricing right now. This also, we can see it on the yields, 2-year and the 10-year for the US, where we touched new higher levels. For the 2 years, we touched the 5%, the historical 5%. We are seeing the yields are coming back a little bit, a correction, but not significant, as we still in the 4.9%. So it's still high. For the US 10-year, we touched again the higher highs around the 4%, which is so much high. So the market's still pricing that the Federal Reserve will hike at least 42 times. The most also important thing will be the Michigan consumer sentiment and the monthly budget numbers, which will give an idea about the health of the economy. So right now for the dollar, we are waiting the Wednesday. I think Wednesday will have a real impact on the dollar. Before that, we may not see something big happening on the dollar, as we saw that in Monday. We don't have that much data coming Tuesday somehow, but the most important will be in Wednesday, where with CPI will make the most important things. For the euro, especially the euro dollar, we have an ECB that right now also it's so much hawkish, and the most important data that will come from Europe, we will have some final inflation reading from Germany, Spain and France, also the EU economic sentiment for Germany and for European Union. Attention to comments coming from many members of the ECB, where they give an idea of where they are going, especially where inflation is slowing a little bit, but the core inflation is still tight, still not coming down. It's the same thing for the USA. So we'll see how we have an idea that the comments will be hawkish by a big probability, like the same thing for the Federal Reserve. So just we should make sure to make attention to those comments. They may have an impact. For the euro dollar, we saw in terms of technical analysis, we still on a bullish trend on the 4 hour. On the 1 day, we still bullish. We touched it again at this support level before the NFP data came. We saw a support level around the 1.085. 10.85. It was a good support. It touched it many times. It was a descendant triangle. It was more bearish because the market was waiting for an NFP that may be high, but it was a disappointment. So as the dollar went back, the euro took the lead, came back to the level of 1.097. So right now it's a resistance level. Touched it in June 23. Touched also in Friday 16 June. It was also resistance at 27 June, and right now we are on 7 July, where we touched it again this level. So what we are waiting that the market will not make, I don't believe that the market will make huge, will not go for more volatility, as everyone is waiting for the data, as the actual macroeconomic environment and perspective still blurry a little bit. The market is right now trying to defeat a little bit the perspective of central banks, as the economy is somehow clear that there is a slowdown in economies, there is a slowdown in growth, there is a slowdown in PMIs, even expectations, sentiments. But in the same time, central banks still want to fight inflation with whatever is the cost. We see Lagarde that is continuing being hawkish, also with other members. So this is for the dollar and euro. So if there is any breakout on this level, we will go back to the 1.10, which seems the right level, where it's a round number. Also, it's the level we touched the 22 June. So it will be a resistance level where it will be supportive for the euro dollar. If we break this level, the next level we have one of the 1.105, followed by, my perspective, I see that is the 1.11, which is a good resistance level, historical level. We saw from the 14th April, we saw also in 26, we saw also in May. So it's important, if we see a bullish and a more sell-off on the dollar, the euro dollar can make this jump until here. This is in the case of a bullish reading. More than that, if we go to the UK, and especially the pound dollar, the pound right now, the Bank of England, it's one of the most bullish central banks, and it's a central bank where the terminal rate, the peak terminal rate, is priced right now around 6.41%, close to 6.5%, which is so much high, and everyone is projecting that a level at those in interest rate at those level, for sure it will have an impact clear on the economy. It will be the probability of a recession, it will be so much high on the economy, and there is something will break housing or sentiment or something else, but the cost will be so much on the economy. But it's necessary, and right now the inflation in UK it's not even slowing, nor the core nor the head of the reading. So we see that this is helping the pound to continue high, and also we are on the historical level at 1.285. A breakout of this level will take us to more highest level. Around my level is around 1.3, will be a good level as a resistance level, historical level too. On the daily basis, we see that the trends is healthy, building some strength, so it may continue. Okay, so for this week we will see if there will be any change in expectation or not. But the most important thing will be data concerning earnings, It has an impact on the perspective for inflation and employment rate. It will be delivered too. So this will have an impact on the pound and the direction. Other else, if we go to the Canadian central bank, Canadian, it really meeting. So we are waiting for increase of interest by 0.25. Yeah, so it will be bullish for dollar Canadian. Right now the dollar Canadian, it's going making a reversal. The actual levels that we should make attention to is the 1.33.8 is a level where a breakout beyond this level, we may see more advance on the dollar Canadian, as we are forming some patterns that is saying bullish for dollar Canadian. I mean a reversal that would happen. For New Zealand dollar, it's similar. We have a meeting of the New Zealand central bank, so it will have an impact to New Zealand dollar. We know that New Zealand central bank decided to stop at the level where which is right now and not increasing beyond those levels, but still the New Zealand is making progress in fighting inflation. For the New Zealand dollar, we can see clearly that we are somehow trying to find a way to go beyond the 1.66. This level will may open the door for other higher levels, especially on the 1.74. Or else we will may see, like I said, New Zealand right now, its interest rate will keep it at 5.5%. Australia, it's anticipating some indicators concerning the Westpac consumer confidence and June business confidence also. On China, right now, the PMI for the CPI, especially, it's continuing down. Inflation is continuing down. There is less confidence that the economy may make a rebound. Data are coming lower and low. States and Bank of China, they are trying to help the yuan, a bit of devaluation of the yuan. So we will see how this impact will have on the market. This is what we have for this week. Thank you so much and see you later.